Now live.
We're now live. Well, morning, everybody. Oh, yes, that's good. Live. Can I welcome you all to this last meeting of the year of the Audit Committee. I welcome Cheryl Sedgley remotely. Thank you, Cheryl. And I welcome Mary Wren and Aftar from our Grant Thorntons, our external auditors, and David Baker, who is presenting the last report. So thank you all for being with us today. Apologies and substitutions, please, Michelle.
We've received an apology from Councillor Kate Halliday, and Councillor Rosemary Dartwell is substituting for her, and the independent member Jim Arnold has given his apologies.
Jim Arnold, for apology, thank you. Yes, I forgot to welcome Rosemary because she was so long a member of this committee. I was thinking you still were. Thank you for substituting today, Rosemary. Right. Disclosable pecuniary interest. This being Christmas, I have decided not to read the whole paragraph because you all know it by heart. So has anybody got any disclosable pecuniary interest? There were none disclosed. Minutes of the previous meeting held on the 28th of November. Can we agree them as a correct record before we discuss them if necessary? Moved by Simon.
No, I'm not moving it either. There's something I'd like to add to it, which...
Oh, you're sorry. Well,
I
was simply asking for your acquiescence that it's a correct record. If you're not acquiescing, we'll discuss it first then.
Okay.
Right. So would you like to raise a point?
Yeah, it's a fairly minor one. When we had Bishop's Castle, I think it was the headmaster or the head of the whatever authority it was, I did ask him specifically as to who actually is responsible, who takes ownership of the changes that basically they've failed to put in place. And because it was very blanket, it was, well, the leadership committee or some blah, blah like that. And I just basically said, well, there must be an individual, surely, who takes ownership. And he did put his hand up. I think his name was Mr. Thorley. And so I just think, for the record, the fact that he is responsible for sorting out those audit issues should have been in the minutes. But if you're happy with it being as generic as it was, then that's fine with me.
Yes. I'm not sure whether we need to amend the minutes at this point, unless.
So if you
Chair, yes.
The minutes at the moment say, in response to a query, Mr. Thorley confirmed that school leaders referred to himself as head teacher, the business manager who was responsible for implementing the action plan, and the resources and personnel committee who oversaw the action plan and held them accountable for it. So it does say the head teacher, okay, but it doesn't say solely the head teacher.
Fine. No, I'm happy with that. That's fine. Thank you, Chair.
Any other points on the minutes? Can we then agree them as a true and correct record? Thank you very much. We now move on to public questions, if any. Michelle?
No public questions have been received.
Members' questions, if any?
No member questions have been received.
Thank you very much. We now move on to I'm going to defer item 6 till after item 7 because I think it, to my simple mind, it seems more logical that way around. Final approval of statement of accounts, item 7. James, would you like to introduce this?
2 seconds. We've got the external audit findings report for item 6.
Yeah, well, I'm just trying to have that up.
You want to do this one first?
Yeah, I think it's more logical to get that out.
No problem. Just open that report up and close down. Okay, thank you. Thank you, Chair. So the auditor statement, the final statement of accounts are attached to the as an appendix to the report. I'm just going to give a brief introduction in relation to the points that are raised within the report. Basically, the work has been going on between the council and Grant Thornton since the audit work was started. Excuse me, should be on mute. And various reports have been taken back to audit committee over the last few months. We were hopeful that by the 28th of November we would have a finalised position, but there was still work that was ongoing. The plan today was that all of the work would be completed. As you can see in table 1 in 7.4, there have been various amendments that have been made to the accounts as a result of the work that's been completed to date. As at this point in time, there are still some items that are outstanding in relation particularly to the property, plant and equipment calculations. That work will be completed over the next few days and weeks, which will take us into January. The hope is that the accounts themselves will not be materially changed by those final pieces of work that are going backwards and forwards. However, if we need to, then we will have to amend the accounts as necessary. So the vast majority of the work has been completed. The adjustments that have been made so far are listed there. Cheryl is here on screen, who can provide details of any particular technical accounting questions that may have, and then we lead into the Grant Thornton report in terms of their findings and the implications that have been picked up from there. In terms of the appendices, we have the full audited accounts included there. We also have the letter of representation, which is ready to be signed as soon as that is appropriate. I'm happy to leave it there, Chair, and take any questions.
So let me be clear on the situation.
Okay.
If we agree these accounts today, despite the fact that there are some outstanding matters, that will satisfy the legal requirement for the accounts to be passed before the end of the year.
If at this point in time, with the information that is outstanding, and I'll pass over to Mary and after we might be able to provide more detail on this. In relation to the information that is outstanding, because there is some work that is outstanding, it is not possible for Grant Thornton to say that any changes or implications that could come from that would not be material. So if they are not material, then adjustments can be made in the new year within the delegation. The accounts would be as they are, and that would be the end of the matter. When that work is completed, there is a risk that there could be something within that which could be material. If that was the case, then we would have to make the decision about whether we restate the accounts on that basis. And if that was the case, then there would be a need to sign off those revised accounts. That's where we are at the moment. And unfortunately, right up until the wire, there is still some work that has not been, we were not able to complete by today. There's a couple of people that are in Monday, for example, who will be providing that information on Monday. However, we're then into the Christmas period, and the question is whether Grant Thornton will be able to then view that information if it's only being provided on Monday. So to be fair, that will take us into the new year. What I can't guarantee is that those working papers and those final calculations that evidence the figures that are in the accounts, I can't guarantee that there won't be something in there that takes us over the materiality limit, which means that we would have to restate that within the accounts.
Would you like to comment on that?
So thank you, Chair. So I think one thing there isn't a legal requirement to authorise the accounts by the end of this end of December. There is a backstop date for the 28th of February 2025, which is the overall deadline for publishing the accounts. You've already met your legal requirement to publish a set of unaudited accounts, which you had done by, I think it was the end of May or early June. So that requirement is made. So in terms of the progress on the work, there has been a considerable amount of work which has transpired since the 28th of November, but we are in a point where there are some material areas like PPE, for example, where we've got specific queries still outstanding for that need to be addressed before we can have the assurance that the accounts are not materially misstated. However, we're looking to basically as soon as the information does come through over the next day or so, we can process it. But the likelihood is for us to get all the work and everything evidence, it's going to happen into early January, mid-January time, and hopefully by that time we will have an agreed set of final accounts. Ultimately, we can't guarantee that there's going to be a misstatement or amendment to the accounts at this point in time, which would impact the final set of signed accounts.
I'm wondering why we're here today. What are we actually going to achieve legally by being here today?
Chairman, what we could do, and we're on item 7 at present, aren't we?
Yes, we are.
Yeah. What we could do is that you could adjourn the meeting until January and then reinstate it. It doesn't need to be re-advertised then or anything like that. That is always a possibility at a meeting, to adjourn it to another date in January. But what has been said about the February, but I also read in some of the press that some local authorities have not agreed their accounts for the last 3 or 4 years. So we can do it in February.
No, well,
we can go through whatever we want to today, or we can just say everything's noted and we'll do it in the February meeting.
Well, I don't think, having all come down here today, I don't think we're going to adjourn till February. We will achieve what we can today. But I think when we agreed this meeting, when I agreed the committee to hold this meeting on the last working day of basically the last working day before Christmas, it was in the expectation that we would be have a complete set of accounts. And I'm sad that is not the situation.
If I can, Chairman, I would be unhappy to delegate this or agree it today, item 6, given some of the comments that the external auditor makes about some of the finances of the council, and especially their final 2 pages in their draft report for that, which is item 6. I would not be agreeable to say that we would do it and delegate minor findings. I think we do need to look at what the final report from the auditors actually is.
Well, I note your concern on that. I think we'll discuss that a little later. Can we go through the remainder of it? Is there anything else you want to say on the account?
I mean, all I'd say, Chair, is just the work that has been completed today. The accounts are almost there, and there is the potential that by reviewing those accounts and effectively signing them off today, there is the potential that there is no further material changes that are required as part of this, and therefore that's the job done from Audit Committee's point of view. If you adjourn, or if you decide to hold it in the we hold the meeting, then we would have to hold that kind of regardless. So that's my understanding, unless Dulson or Cheryl tells me otherwise. My understanding is that we can effectively sign those off today, and that will be the end of it. But there is a risk that might not be the case should something conclude.
So what you have is the decision that what happens out of our councils in this situation is you take the reports as read and are able to authorise the accounts, but then sometimes you can delegate to the section 151 officer for any minor amendments to be made to the financial statements, so that that can be processed. So that's not material items, but if there were material adjustments, then the financial statements would have to come back to committee for approval.
Which seems to me that what we need to do is to approve the accounts subject to there being no further materiality.
Yeah. So if I may, Chair, so the recommendation 3.2 is agree that Executive Director Resources be authorised to make any minor adjustments to the statement of accounts prior to publication of the audited statement of accounts. So that is in place now. If you pass the recommendations today and it is a minor adjustment, i.e. it's not material.
Yes, I understand that.
Then that will deal with it. So there is the potential to complete this today. What I can't do is give you a cast iron guarantee that will happen.
So can we we've not finished the discussion yet, but I'm just trying to see what we are able to resolve at the end of the discussion. Can we then?
Chairman,
I think I'll finish first, Roger, and then I'll call you in. Can we make a note in our resolutions that we are satisfied to pass the accounts today, subject to there being no further material alterations? I think we need to make a note that we have reservations about the fact that there could be materiality, that we don't expect that such will happen. Roger? Yeah, that's, well, either.
well, sorry, and then I'll come in.
Yeah, mine was a brief question really to say, how do we define materiality in this case?
So, as you can see in our audit finding reports, which is in the next item, we do have a definition of materiality, which is the value.
475,000.
What is the?
The council amount is 6.65 million. The group has a slightly higher amount of 7 million. So any adjustment above that level will be seen as a material issue.
It would have to be a very significant misstatement to reach the materiality,
Yeah, absolutely.
and we wouldn't expect that to happen, but we are holding our breath that it doesn't. Right, Roger?
Thank you, Chairman. There are some blank pages in this report. There are some blank pages in this item. Starting at page 25, will be updated once the audit opinion provided by the auditors. That is not included. I don't agree that we can say and give, say that subject to minor amendments, we would agree. I don't know what the auditor's final statement will be. I note what is in item 6, but as I say, there are some blank pages there, and as an audit committee, should we agree a report, given the present financial constraints that the council is in and the problems it is facing, when the auditor's report is not provided as part of it?
Sorry.
Yeah, I mean, I actually took this one up because with James, so maybe it would be easier if James just explained why those pages are blank.
So it's standard practice that we produce the accounts, and those blank pages have been in there right from the start, because those get updated when the final audit opinion is provided. At section 6, we do have the draft independent auditor's opinion, which is stated there. So that is the draft, which is why it's not been added into the accounts as yet. But that, if nothing changed in that, then that would be inserted on that basis. At all.
Okay, I think that's
Chairman, I can follow that.
Sorry.
I do note on page 61 of the auditor's report, it says that they do have concerns about the identified a significant weakness in the authority's arrangements for financial sustainability. This was in relation to the authority's financial sustainability in the medium term. We recommend the authority, and it is there. Whether that appears in the final report or not will depend upon the auditors and any information. But considering that, I'm unhappy about agreeing that this can be signed off now without those final reports from the auditors being involved with it. Because of the situation the council is in, and also its comments about the items there, including the North West Relief Road, and also the 25, 26, and the comments that they made about securing economy, efficiency, and effectiveness in its use of resources. I think they're important comments which we as an audit committee should take into consideration if and when the final report is issued, which is different to previous years because this council is, how can I use the non-inflammatory language, if I can use that? This council is at a precipice at present. I don't know what the government announcement was yesterday and how it will affect it, but we're looking at 23, 24, but they do make comments about it, and I would like to know exactly where we are.
After you want to respond to all this.
So in the draft opinion that we have put in item 6, the wording there is representative of the work that we've done on the value for money arrangements, which we reported in the last committee. The wording here won't change in terms of the value for money conclusions drawn. So this will just remain the same. So we're not doing any further work around the value for money element. What we are now focusing is on the work on the financial statements audit only, which is around the balances in the financial statements. If we find errors and the council adjusts for those errors in the financial statements, there will be no impact on the audit opinion that we do then deliver. The only potential of the audit opinion changing is if we have to disclaim this audit for one reason or another, and that could be for we haven't got the right assurances, the right evidences have come through to us by that 28th of February date, and that will be the only reason for an adjustment to the opinion. And that if that was the case, then I would recommend convening a meeting to just explain and explore all that before you signed off the accounts. But at this point in time, we're not saying we're going to meet that as the threshold. What we're saying is we're carrying on our financial statements audit. If there's errors and they are material, we'll ask the council to adjust the financial statements for them. So that wording and our audit opinion won't be changing.
All right, thank you for that. Chair, just to confirm what Avatar was saying there, and just to hopefully just give a little reassurance to the committee. As I said before, the way in which the accounts are produced, the way in which the information is provided, it tends to follow this route. So in previous years, for example, the audit findings report has said the auditors have identified an error or a different calculation in relation to, for example, property, plant and equipment. The value is X amount, that is below the materiality level. The council has decided not to adjust for that figure, but we're bringing it to the attention of those charged with governance within the audit committee. So it is perfectly normal and reasonable for those sorts of things to be worked through. If there are other minor adjustments that come through as part of that, it is perfectly reasonable for those to be adjusted rather than convene another meeting to say we've changed a few little bits and pieces here which are perhaps trivial, let alone not material. In terms of the reports that have come through from Grant Thornton, on the 28th of November, we had the value for money report, which talked about all of the issues that have just been discussed around the financial position of the authority, the response in terms of the North West Relief Road, and other recommendations, which were not recommendations, not significant recommendations, but nevertheless other recommendations that were in there. That was a public report that's out there. Those audit committee had full opportunity to discuss those and to form an opinion on those, and those have now been passed through. So as I was saying, all of that work in relation to that value for money review is complete, done, signed off. So that will not change in relation to the audit opinion. That's now complete. The only piece of work that was not completed as at the 28th of November was the work around the financial statements, the numbers that go into the accounts for 23-24. You'll remember that a lot of the value for money report talked about the current position for 24-25, for example. This is about looking back at the statement for 23-24. And the pieces of work that are outstanding are specific calculations and working papers that give enough information for Grant Thornton to be able to say we are comfortable in those figures, or we're going to challenge those figures based on what that information is. That is a normal and usual part of going through the accounts process. So as it stands at the moment, that draft audit opinion is there, it's complete, and as Avatar has stated, unless there is something that comes out which requires those financial statements to be changed, nothing will change within that statement. It's not included within the accounts because we never include it within the accounts until that has been completed and then the final accounts get published. So just to be clear, there is no There is no information that's missing at this point. It goes back to the salient point that we discussed earlier. There is a risk that as part of that final working, there could be something which goes above the materiality level, which will change the statement in 23-24. It will have no impact whatsoever in terms of the value for money review, which is already completed and signed off by this committee.
Thank you. Well, from all I have heard in this discussion today, I come back to something. I am minded, when we have given further consideration to any details in the report, any queries you have in detail, I am minded to move that we approve the recommendations with the inclusion that we note there is some risk from an appearance of some item above the materiality. We'll sort the wording out in a minute. So that's what I'm minded to move at the end. But I'm not moving it at the moment until I have heard any comment that any of you wish to make on the details report. Simon's got.
If I may.
Yes.
Yeah, if I may, I'd just like to thank James and Avatar for the absolute clarity with which you explained that the financial statement is a statement of financial fact, and it's only whether there is a material difference to that financial fact. And don't forget that this is March 24 we are talking about, and that's what you're reviewing. That is what the chair has just explained. I hope we're about to pass. We do need a further debate on what you're actually saying in the auditor's draft opinion, because that is absolutely crucial. And I would note that it's not a qualified statement. So, I mean, actually, this is good news, and it's disappointing that we seem to be taking it as really negative news. And we all do know, and I appreciate what you're saying about the ongoing sustainability as we walk into the accounting year 24-25, which doesn't end until March 25. I do have, if I may, Chair, just a couple of more detailed queries.
That's right. Yes. We are
the,
discussing the details of the report.
Yes, I appreciate that. There was just one is my naivety. What is a transfer payment? It's on page 15. You've got a rather nice Venn diagram. It's not a Venn diagram. Hi, John. Thank you, Rosemary. And you're a scientist, so you'll be able to help me out there. But just what is it? And the second one was on the Northwest Relief Road, the 5.5 million. I mean, this is a very sensitive issue. I mean, has council money been spent, or is that money which we are looking to recover from grants that we are expecting to receive to fund the Northwest Relief Road? That's on page 16 of the, what am I looking at?
Everything in the statement of accounts.
Yeah, in the statement of accounts. Is that okay? If I can answer those two questions.
Yes, James will answer that, and then I'll go to Rose.
So, in terms of transfer payments, fundamentally, these are payments that come into the authority and back out the other side without sort of touching the side. So there are, I suppose, an example would be some of the housing benefits grants, that sort of thing. So yeah, provided with the money, and it's considered as a transfer payment in that sense. It's not the council kind of making a decision around that independently in that sense. There's a better definition.
4 million.
Yeah.
Under place, and it's under expenditure 23-24. Significant expenditure items 23-24.
Yeah, so we have got £5.544 million shown as expenditure in 23-24. So this is the capital expenditure over the period. So the Northwest Relief Road funding is a combination of grant funding. There's some in the fullness of time, there's a couple of receipts, still Section 106, other grants from the LEP, etc. that are in there. So this is just demonstrating the expenditure within the year in relation to that. It doesn't show the funding. The funding is shown as a separate part. But so where that particular has been funded from, the majority we are trying to fund the.
So it's ring fence money, which you're identifying as ring fence
Yeah,
Northwest
this is
Delivery
the-
money coming in from LEP or whatever.
Yeah, for you.
Okay, no, I'm fine.
This is just showing the expenditure that's been undertaken over that financial year in relation to all of these different project areas. So there was street lighting replacement was 3.7. That was the expenditure. Where that was funded from would be, I don't know, sales, loans, and capital receipts, and or potentially revenue funding. So those are listed there just at that level of expenditure that's been incurred in the financial year. Clearly, with a lot of these projects, there may have been expenditure in the earlier years, which will sum up to the total that.
Yeah, I mean, the point I'm really making is what you're not doing. We have to dig back to identify where the revenue came from.
Yeah,
Before that, and it could be grants or whatever. No, that's fine. Thank you. That's all I need.
Sorry.
It was rare.
Yeah, thank you. Yeah, mine's at 7.4, page 19 of the whole agenda pack. And it's just asking about, it's been identified during the audit that grant received in advance in capital held in the balance sheet has been overstated by 5.5 million thereabouts. Includes 3.5 million of Shropshire Council's element of broadband gain share, which should have instead been held in capital grants, etc., etc. Just really asking you to sort of elucidate that a little bit and tell us why, what, and will it happen again?
The chair's okay for bringing Cheryl in to.
Well, certainly, yes. We seek any advice from competent quarter.
Yeah, so this, we receive an amount from BT as part of the broadband agreement, and we've received this for a number of years. We have been holding it in capital grants receipts in advance because we believe that was the correct treatment. When we've looked at it this year in a little bit more detail, there are no conditions on that particular funding that we receive from them. So technically, we shouldn't be holding it in capital grants receipts in advance. It should be held elsewhere on the balance sheet. So it's not that that amount isn't relevant to us. It's still a receipt that we receive, but some of it was due to be paid to BD UK, so the proportion of that was due to be paid over to them, so that should have been held in the creditors balance, and the other portion, which is Shropshire Council's share, should have been held in where have I put it now, where have I put it, capital, sorry, in the unusable, in the usable reserves, sorry, in the usable reserves in capital grants unapplied accounts. So it's just where it's been held on the balance sheet. It isn't that that amount isn't relevant to us or has been overstated incorrectly. It's just, it's where it's actually shown in the balance sheet. So we have done that wrong, it appears, for the last about 3 years. So we've taken the opportunity to correct that this year. For all those 3 years, it's the total amount has been corrected in this year's accounts.
Right. Are you happy with that, Rose?
Yes, I am. Thank you.
Roger.
Thank you, Chairman. I was also going to raise the point that was raised earlier on about the Northwest Relief Road, and where it says in reserves on page 15 and 16 about the amounts that have been transferred out of reserves to arrive at the position we are in, including the money coming from the earmarked reserves, which I total up to be about 14.5 million, including £2 million from the insurance reserve, including 2.5 million from the major scheme reserve, including £9 million from the services department reserve, 9, 10, 11, 12, 13.5 million. I note the paragraph on page 15 where it says about the reserves. As an audit committee, should that amount of money have been taken out of reserves, especially the insurance reserves where we self-insure a lot, which is being depleted, is that still a safe amount that is in the earmarked reserves. £2 million is a lot to be taken out of that, as well as the other places. And then finally on this one about the North West Relief Road, is that capital that has been spent there, 5.5 million? I assume it is. Now, where did that capital come from? Is that a grant that we have received from government towards the North West Relief Road and we are spending that, or is it capital out of the Shropshire Council's own money, which we will be claiming back from the government when and if the North West Relief Road goes ahead? Because that is a charge against the council or a charge against the government. I am being told from various sources that discussions have taken place between the council and the government about capitalising and what would happen if the North West Relief Road didn't go ahead. So it is of concern where that money there, 5.5 million, should be there, because if it's cancelled by us or cancelled by government, it may be treated differently. So is it our capital or the government's capital that has been used there?
Right, so which of our experts, Cheryl or James, is going to answer this?
I'll kick off, Chair, and then Cheryl can jump in if there's anything that I missed.
The deep end.
Yeah, she can correct it when I go wrong. So in terms of the first question, in terms of the reserves, I was trying to find the reference. I apologise, I couldn't find that. But in terms of the allocation of reserves and the specific concerns around things like the insurance reserve, etc. So you will be aware in 23-24 that we did look at all of our earmarked reserves. That was part of the programme that we undertook over the year to ensure that we could balance the financial position by the end of the year. We looked through all of our earmarked reserves and we went through those to identify funds that we could apply through to adult social care as it was. This was reported through in all of the monitoring reports over the year, so that was completely clear. So that detail is there. In terms of the specific point in relation to the insurance reserve, we do self-insure. We hold a reserve in place for those areas where we do, and we also have deductibles within the where we do not self-insure. And there's a lot of things that we don't self-insure, just to be clear. But we still have a deductible which could be £500,000 in certain areas, so we need to be making sure that we're covering that. Every few years we have effectively an actuarial review of the level of reserves that we should be holding for our insurance risk that we're holding. So if we, for example, increase the levels of deductibles, which enable us to have a lower insurance premium, and so that deductible, let's say, increased from £500,000 to £1 million, that means if we have a claim for £5 million, the first £1 million would pay out by us rather than the first £500,000. Then we would take that into account in terms of our assessment of the level of reserves that we have to hold. So that can go up and down as necessary. Added to that, we then have to think about the general fund balance and how much risk is associated purely with the insurance fund and how much is held generally within the general fund balance. So those things together provide us with the assessment. So we will not take money out of the insurance reserve unless we should or can. And where we take it out, the alternative would be that we are holding more money in reserves relating to insurance than the valuation is suggesting is prudent or necessary. So why would we hold more money in those reserves rather than using it for the purposes that that money was created in the first place? In relation to the North West Relief Road, yes, that funding is capital. As I gave the answer to the previous question around this, that the funding for that is not shown within those figures. The funding is a combination of government grants, sales section 106, capital receipts, and other sort of items in relation to that. I mentioned the LEP grant as well. So there's a number of things within that. When we apply the funding, so with capital, you have the expenditure that's been incurred, and then there's a separate calculation in terms of how that's funded. What we tend to do as an organisation is we will apply that funding within the terms and conditions of the grants, for example. If we can apply grants first, we will do that, because it then means that the capital receipts that we hold don't have to be applied, and they can be carried forward and used in the later years. So the profile of the use is different, perhaps, to the percentage. So in terms of the North West Relief Road, figures off the top of my head was it was originally a £74 million scheme, and about £54 million of that was grant funding. So you would expect 5/7 in that sense to be grant funding. However, what we would probably do is use 7 cents of that funding in the early years, because then that enables us to demonstrate that the grant is being spent. So as the follow-up question that I'm expecting, if government then said that the North West Relief Road is cancelled, or should we decide to cancel the North West Relief Road, there is then a question that will go back to government to say, under the terms and conditions of that grant, are you prepared for us to write that off, those costs off, or are you going to call that grant back? If that grant is called back, then the write-off of that would be against revenue. If they don't write it off, the question then is, are we allowed to write the costs off against that grant as a capital grant, or would we again have to apply for a capitalisation direction to enable us to do that? So at the moment, there is no answer to that question because we don't know what that position is in the future. I can't predict what that's going to be, but we understand what the implications of that would be depending on whatever decisions are made around that.
Well, that doesn't really, thank you, James, for that. That's all for the future. It doesn't really affect the fact, and Simon reminded me earlier on in his remark, that we're actually discussing the 2024 accounts, which was the year that ended last March. So what happens to the North West Relief Road in the future would seem to me to have very little relevance to these particular accounts.
Chairman, it appears in these accounts and it was spent in 23-24.
Yes.
I'm asking where that £5.5 million came from. That money has been spent. So where has that money come from to provide that £5.5 million? Cash has been spent.
Okay.
Where did that cash come from to be spent now?
We've got the question. Now, James will answer that specific question if he's able to.
Okay. I apologies. I think I've answered this twice now.
Yeah.
The funding comes from government grant, from Section 106, from SIL, from capital receipts, and from other funding. That's where that comes from.
Where can I see it in these accounts?
You won't. The funding for the capital programme is that shown in the detail of this, Cheryl? Sorry, Chair. Is the detail of the funding? It won't show the individual funding for individual schemes. I'm wondering, is there the global funding shown within this?
You see the global, there's the note, capital financing note, which shows the global funding, but you won't see detailed project breakdown.
We do. Sorry, Chair. I know we're talking around it, but the detailed account. Sorry, not the detailed accounts. The detailed working papers, detailed information that's held around the capital programme will show all of the movements in and out of where that's coming from. The way that it tends to be reported, and what you'll have seen in the monitoring report, so whether it's in the statement of accounts is irrelevant in that sense. From the monitoring reports that are produced every quarter in 23-24, produced every month in the current financial year, the capital programme shows the level of expenditure that's being shown and the funding for that within those monitoring reports. What it doesn't say is, of this capital receipts figure, which comes to £5 million, £320,000 went to this scheme and £400,000 went to this scheme and whatever. So all of those things are just listed in summary. What I'm trying to think through my head is that summary shown within the statement of accounts? It's probably one of the early pie charts, but apart from which is the chart at the bottom of page 33 of the pack. Shows the capital financing, but it won't break that down into individual schemes because that would be a lot longer.
James, if I can just add, just above that table on that page, it talks about the financing. So you'll see that we spent a total of 92 million on the capital programme, and it breaks down that financing. So it breaks down that 92 million. So 55 million of capital grants, 3 million of revenue contributions. So as James is saying, it shows it in total rather than individual schemes, but it does give you a breakdown of the total funding and where those main sources have come from just above that table that you're referring to with the North West Relief Road in.
Thank you, Chair. That's very helpful. I think we've discussed this in some detail.
This council is at risk at present.
We're discussing the 23-24.
Yes, I'm coming to that, Chairman. This council is at risk at present. In the auditor's draft statement, it makes a comment about the financial stability of this council, and it needs to look at how it is going to deliver the money so that it can continue as a council. £5.5 million there. Is it at risk if the Northwest Relief Road is cancelled or not, or have we paid for it already out of the council funds? That's all I really want to know. So does that count as a risk for the council or not? If we paid for it out of council's capital, okay, we have spent it. Whether it's good or bad, that's another argument. As an auditor, me, with my limited experience, I'm asking, has that money been used from a government and it is at risk for the council or not? Or have we used our own funding for it? And I'm receiving that some of it is our funding, some of it is other people's funding at this moment in time. Is that a summation of it?
Well, James will try and clarify.
Sorry. So yeah, I appreciate the point you're trying to make. So if I explain it in a slightly different way, then hopefully that will help. In terms of any capital scheme that we undertake, regardless of whether it is funded from government grant or from our own funding, for that scheme to be considered capital expenditure, there needs to be a completion of that scheme and an asset at the end of it, fundamentally, that can be demonstrated. If there isn't an asset at the end of it, in simple terms, so in other words, if the Northwest Relief Road was cancelled and there are pieces of work there which do not relate to physical assets in the ground, then all of that expenditure under accounting rules would then be written off and charged to revenue. So from that point of view, every penny is at risk in that sense. Okay, so it doesn't matter whether it's government or whether it's our funding. If the scheme is cancelled, all of those costs have to be written off. So the point that I was trying to make earlier was, if the government decided they wanted to pull the plug on this, for example, and they said, but as part of that, we are comfortable that you have effectively a capitalisation direction that says you don't need to write those costs off against revenue, that would be fine. If they said, and the capital receipts or any funding that you put in doesn't have to be written off against revenue, that would be fine. That would cover that off. We wouldn't have to. If, however, they said no, and we want all of our grant reclaimed, we would have to find the cost for that. If they said all of it has to be written off to revenue, we would have to find that money. My point is, we don't know that as yet. But to answer your question specifically, unless there are assets that have been created or produced as part of that programme, and there will be some works where we can say, oh, actually there are things in the ground there that have been done that are there kind of permanently. Unless there are sufficient to cover the entire cost, which they will not be, all of that would therefore be at risk, and it doesn't matter how it's funded. Does that answer your question?
Well, I think we've gone as far.
Can I go on to page 20, Chairman?
Yeah, it's another point.
Which states the outlook for the council, and it states in that the proposal delivered would put the council on a stable financial footing. It goes on to explain the reasons that we have overspent and had to use other money. It does not explain that in the Place Directorate, for example, commercial activities did not deliver the savings and the surplus that was going to be made of several £1 million. So that isn't mentioned there. So all that's there is children needing support, COVID, demand for temporary accommodation, cost of living, challenge of delivering services. But there is no mention at all that I could see in that report there about the failure of the council to deliver what was promised in the budget, the surpluses and the savings that were in certain areas. Quite substantial surpluses that should have been generated, which the council did not do for whatever reason. We have an audit committee, so therefore surely something like that should be included in that statement.
Well, I think that's a matter of opinion. This is factual.
Well, actually, it's on when it says, as a result of the work of officers to identify these spending reductions, this produced a balanced budget for 24-25, and I think, quite frankly, that's where it ends.
Right, well, we have given this.
Can my question be noted and I have other questions, Chairman?
Fine.
On page 63, it looks at the LEP assets and use of. And it says that a meeting held in March. Is that money still there available to be used or is it not? It says the meeting to look at this and the council is the agent for it. Is that still the situation there?
Whereabouts is this on page 63?
Page 63 or 53, depending on which page you're looking at.
Yeah, it's the report.
Should have been, maybe I've,
Two sets of page numbers
yeah,
on the bottom.
I've got it down as 60. There is a paragraph in it. I can't find. I'll get it down to 63. Apologies.
You see, this item on page 63 is critical judgments in applying accounting policy. Is your question part of this section?
It's to do with the LEP, and I can't find where the reference is to do with it, but it makes reference that the council is the agent for it. And I know there is money there promised, and I just wondered, is that still there or not?
Well, without knowing what you're looking at, we're unable to underline.
Chair, if I may, I can help.
Which page is it on?
It's on 63. And it says the council acts as accountable body for the LEP and therefore receives grant income on behalf of the LEP and processes expenditure in line with the grant schemes. Now, if that is what Councillor Evans is referring to, I would have thought, as James has already said, it's part of that the transfer accounting. So whereas money has come in and it's referring to it and then money is spent. And I'm not sure really where Councillor Evans is going with this, but I'm assuming he's concerned that money is with us or hasn't been spent. Is that right? Yeah. So I mean, it's how James, you process LEP money.
Yeah, right. Okay, so thank you, Chair. In terms of so the Marches LEP was set up and went into, it was dissolved at the end of March 2024, and as part of so the government wound up these local enterprise partnerships. Shropshire Council was the accountable body on behalf of Shropshire, Telford and Hereford, and so government funding was played into the LEPs over that period. At the end of that process, when the LEPs were dissolved, there was a requirement then to set up some form of a successor body. That successor body that was set up for the LEP was between Hereford, Telford and Shropshire Council, and it was the Marches Joint Committee. So there's now a joint committee in place. So the funding for that joint committee is so some funding was provided to the accountable body, which remains the Shropshire Council. However, the kind of the management of the joint committee is actually undertaken by Hereford Council. The funding that's held within that is held in a ring fenced. I think it's actually still in a separate bank account, if I remember correctly. It's ring fenced and separate, and it is up to the joint committee to continue and wind down the final work in relation to the LEP. So there will have been grants expenditure that would have been incurred before the end of March. So that's gone out the door. Nevertheless, there'll be performance reports and key indicators, conditions of the grants that need to be delivered and ensured are delivered, which may take 1, 2, 3 years into the future, which the joint committee are in charge of. Any funds that have not been processed by the end of March, the LEP, before they dissolved, gave indications of where they wanted that funding to go. The majority of it had gone, but that money is held in anything that's left is held in a a separate ring fenced account and to the joint committee, not Shropshire Council as the capital body, to make decisions on how and where that money is spent. Does that answer the question?
Yeah. My final question is on page 96. There's and it's picked up by the auditors in the debts of more than 1 year overdue, £9.5 million in round figures. What is the council doing about that?
Is this the section on age of debt or?
Age of debt, yes. If you go more than 1 year overdue, 23-24, £9.5 million. It is picked up in the auditor's report, I noted.
Well, what is your question then?
My question is, what is the council doing about it? Should that be that amount? Some of it is unrecoverable, according to what I read in another report. So is there a procedure that we're going to adopt to write some of that off or not?
Well, we do, of course, as an audit committee, get fairly regular reports on the debts outstanding, and we are from time to time asked for approval to write off certain debts. I mean, when it says more than 1 year overdue, I guess in an accounting situation, there are some of that debt goes back donkey's years, but has simply not yet been written off. James, would you like to?
So I can comment again. I don't know that I'll let Cheryl come in if she wants to say anything in a moment. But the classification is there. We show all debt under 3 months, between 3 and 6 months, etc. And then we've got that debt over 1 year. So absolutely correct, Chair. There could be a very long tail in relation to that debt. Now, what you can have is a very long tail of debt, but you have a repayment plan against that. So you may have debt that's 5, 6, 7 years old, and that's due to be paid over the next 10, 15 years in some cases. That won't be the case in all situations. There will be some debt which is currently trying to be recovered. There'll be some debt that has tried to be recovered and has dropped into lower priority that will be brought back onto the table at a later date. Ultimately, there is a point which I think is part of the point that's been gotten to here, that debt ultimately, if it's irrecoverable, it has to be written off, and so you have a bad debt provision to write that off against. So what we don't want is a lot of debt sat there on the balance sheet which is not going to be recovered, but at the same time, I don't want to write debt off when there is a chance that it might be recovered. So I'd rather it sat there if we think that it can be recovered, but it's a balance all the time. Hence, the information is here, available for people to challenge, and it allows audit committee to take a view on whether we should be, for example, prioritising that debt. And that could be, that could be social care debt. There could be, I don't know whether a debt in relation to property falls into that as well. I don't know the specific definition, but there could be all sorts of reasons as to why that's there. We can, take a harsher recovery plan into this. If we wish to, we could be more zealous in terms of writing debt off to try and reduce the impact on the balance sheet. It's all balanced.
If I may, I mean, we have to keep getting back to not really a critique as to whether you're writing debt off appropriately or not, but this is the 23-24 audited account, draft audit, and this is what we're looking at. This is not a debate as to how, well, it should not be, Chair, a debate as to how the financial team actually manage the what I would describe as the long-term debt. And if Thornton are uncomfortable that the council is inflating its balance sheet by not writing this debt off, then Grant Thornton, I trust, please get me if I'm wrong, I'm not an accountant, would advise, and their advice would be in this report. And so if it's not in this report, one can only assume that Grant Thornton are comfortable with the way that the council is managing its long-term debt. So perhaps you'd like to add to that, Avatar, and I'll be quiet.
Yeah. So, yeah, so I think from our audit work and our audit procedures, we're comfortable with the, the debt figures that are produced. Without looking at the detail myself at this point in time, there will always be historical elements of debt, which will amount to some of the balance. And there will be points in time where we will eventually challenge to say, actually, it's so old now, should you be writing it off? But I don't think we've come to that conclusion at this point here. I just pass it over to Mary, she might add in.
Yeah, thanks, Avatar. Just to go, so there is a high level of old debt across various streams of debtor, but equal and opposite, there's also a high provision against that debt. So we're happy that there is a prudent provision in terms of bad debts in old money, but credit losses in new money. But it's the point raised in the audit report is that there's an administrative process that needs to happen almost to cleanse those very, very old balances. And that's the point that was raised, but we're happy there's a prudent provision for bad debts in the accounts.
Well, I think we've dealt with that quite adequately. You will understand, members, that I am obliged, these are the consideration of the accounts, I am obliged to allow members to raise whatever questions they wish on the reports. And Roger has been kind enough to indicate that was his last question, so I'm ready to move to recommendations. Listen carefully. I'm going to move recommendations 3.1, 3.2 as they stand. The last recommendation will be 3.4. There will be a new recommendation 3.3, which says, note that there is some possible risk that there could be a material misstatement which would cause reconsideration of the 23-24 accounts. So that's what we have got. 3.1, 3.2 as they are, 3.3 renumbered 3.4, and including in what I am moving, 3.3, note that there is some possible risk that there could be a material misstatement which would cause reconsideration of the 23-24 accounts. I move those 4 recommendations now. Is there a seconder?
I'll second it, Rob.
Right. All in agreement? Are the abstentions? Well, are you against? Those against? Those recommendations.
Sorry, has Rosemary got her hand?
I'm not abstaining.
So you're not abstaining?
No.
Well, are you voting for or against? Sorry?
I'm voting for.
Right. So that is, thank you, Rosemary. I'm sorry we weren't clear on that. So that is carried by 3 votes to 1. So those recommendations will be minuted. You're happy about that extra? Okay, thank you all for, we gave it an hour's consideration, which is certainly for the final approval statement of accounts, I think, merited. We now return to item 6, the external audit, Shropshire Council audit findings. And this brings Avatar onto stage now to introduce the report. 6.
Thank you, Chair. So we have touched upon the key element of this report, really, in terms of there is still work to do before we can draw the audit to conclusion. On the status update report, we've got, there was a number of areas. So in our page number 8 of the report, there was a list of outstanding work. We can say that work has moved on, and Mary will provide further details on where it's moved, but there is still work to be done. The key area is property, plant and equipment, where we've got queries and information outstanding. So until we get the assurances on those areas, we won't be able to sign off the audit opinion, because as already noted, it could lead to an error that we need to consider, etc., etc. However, if I look at the face of, you know, just give you a helicopter view of where we're at, we're probably about 90% complete on the financial statements audit, which is a good achievement to compared to probably say last month where we were a lot further behind on that. So I do want to thank you know, finance officers to actually supporting, help driving to get the audit to completion. But unfortunately, we haven't got to today where the audit is complete. I'll pass it on to Mary now to go through more of the detail of the report.
Thank you, Avatar.
Thank you. Thank you, Avatar. Thank you, Chair. As Avatar said, if I could just take you straight through to page 8, which is the traffic light page, as it were. Obviously, you'll see from the face of the report, this was written on the 11th of December, so things have moved on since that time, and I will just go down each item and provide a really, really high-level list. So, the receipt and review of responses in relation to internal, external valuer points. Well, we've touched on that, so those items do remain outstanding. There is a point on there also in the red box, red traffic light, which is receipt of evidence to support PPE existence samples. That work is now complete. The just moving down, receipt and review of updated financial statements. We've reviewed the financial statements that have been presented to committee today. We do have a couple of queries on the disclosure points, but there are 2 material changes and we are satisfied that they have been processed by the council appropriately in these statements. There is also receipt of outstanding evidence regarding payable sample. That evidence is now received and complete. Receipt of outstanding evidence regarding fees and charges sample. We have received that recently and are working through that. The query regarding operating expenditure, that information was received. Unfortunately, that item was a test fail, so we did have to extend our testing around the completeness of operating expenditure. That sample was sent to finance team and there is a response there now, so I believe that sample has been responded to and we will work through that. Work on pensions assurances, an updated IS 19 report, that work is complete. The review of the council's assessment of going concern is also complete, as is the consideration of IFRIC 14. This is linked to pensions too. That is also complete. We've also received relevant assurances from Cornovi in terms of the material inventory balance, so that work is now also complete. Again, housing benefit payment work is complete. We are just working through final pieces of information in relation to council tax and NDR income, and on the above, all of that, once that work is complete, there will be the final manager and review of that work. So, as I've said, the main area where there is are queries in relation to, for example, gross internal areas, and it's generally the inputs into your valuations that we focus our testing on. Those can, if there were to be an error, they can extrapolate to a material value purely because property, plant and equipment is such a large value within your financial statements. But we are working closely with the finance and the estates team to close that down. So obviously some of that outstanding information at this stage does impact on the significant risk areas of the council and what we actually report today. So if I could just take you to page 11. So pages 11 to 15, these are the significant risk areas for the council. So our work is well progressed, but due to those items I've mentioned, we aren't able to conclude fully on 3 of those significant risk areas, which is the presumed risk of fraud in revenue recognition, the risk of fraud regarding expenditure, and the valuation of land and buildings and investment property, which are within those pages. So I won't go through those in detail, but once those queries are resolved, it will tie off that work in those significant risk areas. Our work in relation to management override of controls, and that's primarily work around journals, set out on page 12, that work is complete. No further issues to report on that area, and our work on the pension liability on page 15 is also complete. There are reporting points on pension liability which I'll come to shortly. So there are no further points to raise in relation to the significant risk areas. So If I could just take you to page 25 of our report. One of the areas that we do have to look at is going concern, and we have carried out an enhanced procedures in terms of the council's consideration and the stress testing that the council puts on its own going concern assessment. So that work is now complete, and we're satisfied with the procedures around going concern. Obviously, we have wider duties as your auditor, one being the work we carry out on the council money arrangements. So those are detailed on page 27 of the report, and the full report, the auditor's annual report, came to the last audit committee meeting. So I wasn't going to go into that in any detail in this report, as obviously that's already been presented. If I could just take you now through page 42, this touches on these are the audit adjustments that have been identified to date. So as James, the report from James touches on both of these points, I'm not going to go into great amount of detail, but there are 2 monetary adjustments. There are also disclosure adjustments, which are set out on pages 43 and 44. So for both of the adjustments made in relation to the pension, and also in relation to the capital grants received in the band switch, which we've briefly talked about, both of those adjustments have been made in the set of financial statements marked as revised in your pack. There is an unadjusted misstatement related to pension estimation, and that's on page 45. This is consistent with previous reporting, and it does come from the pension fund, a reporting from the pension fund auditor. It's quite consistent. It is an estimation, so we wouldn't expect it to be adjusted, but we do require assurances on that. So specifically in the letter of representation, we will require representations from you that you're satisfied that that is unadjusted, and that's a normal part of the representation process. I wasn't going to go into any more detail within the report. We do obviously make recommendations from our work, and we will follow those up as part of our planning for 24-25 and report progress against those recommendations as set out in Appendix A and Appendix B. We'll report those as part of our audit plan and audit findings into 24-25. We'll have to take any questions on them.
Simon.
Yeah, thanks. That was really very thorough, and I was really pleased to see, as a member of the pension committee, that not only did you address, you explained the need for the adjustment, and it's even more rewarding to find out that it's actually a pretty regular thing that happens. And I think it was inflation based, the need for the adjustment, which is, and I'm also very pleased to see that you are now getting the info we had. I mean, I know you've struggled, and that has now come on. So it was, that is good news. I've just got really one other point, and this is, I think we've discussed it once before. I think it's on page 26. This audit objection. It's just sort of like, it's like sand in the gearbox, really. Because I think it's gone on for a while, and if there is a material objection, which I believe this is not. How do we move on? Because it's not good to see that there, actually. That's really my point. Not your problem, probably James's.
I can just give an update, really.
Yeah, if you would. Yeah, thanks.
So at the moment, so we've got the historic objection. We have got a specialist who deals with objections working on trying to close down that objection. I think we're just waiting some information from the council just to progress it further. There is another objection as well that's come out, which we got on the financial statements, and I can't go into too much detail, but there's an objection which has been raised on a number of council accounts and pension fund accounts that we need to address, and we're working on a national approach on how to deal with that objection. So hopefully we can get to conclusion on these objections in a reasonable amount of time, because there is a focus with a special objection team that are looking at this work.
So the second one is a generic
It's an
objection for all councils, is it?
Or For some specific councils who hold pension funds. So it's there isn't an area where we're seeking NAO advice on how best to deal with the objection without, you know, creating lots of work for every single council.
That's really helpful, and I'm really pleased the first one, which I think is a land issue, I can't really remember, is beginning to run its course, and hopefully will be over soon. Sorry, Rosemary.
No, yeah, thank you. Yeah, just to really follow up on that and say that, yes, well, I've been on the audit committee from May 21 to May 24, and these things have been going on for a very long time. So really, the nature of these objections is like a kind of dialogue, isn't it? A dialogue that has gone on for probably 2 years, something like that. And that, is there any point at which, I mean, obviously you're talking about resolving it, and you've got specialists involved in resolving it. But I just think, is it a kind of serial objection, or are you still discussing the original query?
We're more at the phases of completion of the objection at this point in time. So it is moving on, and I think we're just waiting for some further evidences to conclude, really. The problem we have with objections are there is a lot of dialogue, so you will produce something and then there'll be further questions and come up, and we have to get to a point where we can sort of say that's enough work that we can do on this objection and satisfy the objector's sort of need. And there is a point where we will just draw a line under it and move on. But at this point, where there are salient questions or things or evidences that we think we actually do need to see, we do need to get those before we conclude whether the objection has any material merit or not.
Okay.
Thank you, Chairman. Understand what's written in the accounts, but it's a question, and maybe James can give an indication. I know we're on 23-24, but you do make a comment there about the minimum revenue position, and the council's way it handled it in 23-24 would not comply with the regulations which come into effect in April 25, which is future. But okay, but I wondered, has that been taken into consideration? Has that change been implemented? And if that change had occurred in 23-24, would it have had much difference in these accounts? I know 23-24 you complied, etc., but from April 25 it isn't. There's just a little bit of information there. Would it affect how the council operates and the minimum revenue position? It was explained to me a number of years ago, which did my head in a little bit. But yeah.
So you're looking for it again?
I know, I know again.
I just see on the government website.
Yeah. So yeah, and I do know that we did comply. It wouldn't now. So have we taken that into consideration for it as the audit committee? It would be good to know.
Yeah, it would help. Cheryl, have you? Sorry, Chair. Cheryl, have you got the detail on what happened with?
Well, there's no need to just say yes, we have, or whatever.
Yeah,
assurances.
Well, Cheryl, I'm anxious to give Cheryl as much of the floor as she deserves.
Thank you, Chair. Yeah, we've certainly looked at it. As I say, we have been doing our MRP policy. We've been applying this for a number of years in this way. Our understanding is that it is, or we believe this is the correct way to do it, and the regulations that have been in consultation for a number of years have been saying that they were going to be changed to bring in line how we've been reflecting it. So at the moment, we're not in line with the regulations, but the regulations have been published stating that they are changing so that it is in line with how our policy is. So rather than change it now for a year, the decision has been made to maintain it based on this, because this is how it's going to be reflected in future years, and that's how we've progressed it. We haven't done, I'm not aware that we've done a calculation to see what the impact would be if we were to change it. So at the moment, as I say, we're doing it in line with how we believe the regulations are coming in, and that's how it's going to be shown. So that's how we're reflecting it.
Thank you, Cheryl.
If I could just digress for a moment with a bit of information, a bit of reassurance, I think. I have been copied into a letter as chairman of the audit committee, which has gone to James as section 151 officer from the audit commission, the government's audit commission. The government is so concerned that there are authorities who are 8 and 9 years behind with the submission of their accounts. Makes us look right bang up to date, being almost where we are. There are so many councils that are so far behind and have very little prospect of bringing themselves up to date without radical change, that there are a complete new set of proposals that are going to go through Parliament for very considerable changes in the audit, the way local authority accounts are audited, and hospital and NHS accounts as well. And there will be a consultation going out on this, which we will hear in due course, and which we and our officers will have the opportunity of responding to if we have thoughts on the way in which the whole audit process of local authority accounts can be changed and improved by the government. Simon.
So I think it's, I mean, like Rosemary, I've been on this committee for about 4 years now, and actually, I think it's to the credit of both Grant Thornton and James's team that while that's post the COVID period, we were, and the audit committee itself actually, we were concerned at the slippage of when the accounts were produced. I mean, one of the things, if you're going to have accounts, they have to simply be up to date, or they become, literally meaningless. And I would say, Chair, I think everybody in this room has actually done well to make sure that this council is not one of the 8 or 9, which have, or whatever it is, that we have kept our accounts up to date, and you've caught up as well. Yeah. And I think it is a real credit that we are looking at the 23-24 accounts. I mean, I'd like to have seen them signed off in September, but I appreciate that's never going to happen, usually a 6 months period, but we're not corporate. So we are, December, and quite frankly, we're just about there. And so, congratulations all.
That's very well merited remarks, Simon. I agree with you.
Might be right.
Right. So can we accept the interim audit findings report of our external auditors with thanks? Read that we accept.
This is the draft report we received. Yeah.
Well, yes, it's headed the interim.
Yeah, but the final pages is the draft comment, isn't it, to the council concerning it? Draft independent auditors report to the members of Shropshire Council.
Very good, Roger. Yes, so I accept the report as stated. Can we agree? Cheers. Thank you very much. Right. We now move to item 8, which we ask you to note at the time of next meeting. Item 9. Have we any press or public online?
You still need to end the live event.
Sorry?
You need to end the live event before you see.
Yeah.
Proposed chairman.
Yeah, right. I won't read the whole resolution then. Great. Thank you. So we've agreed to exclude the press and public. Since Simon has felt the necessary for a comfort break, and I think I want to give fully adequate consideration to the next item, we'll have a 5 minute comfort break. Thank you.